Let's take a minute to talk loan estimates. You receive a loan estimate within a few days of telling your lender you're going to be working with them. A loan estimate breaks down all of the numbers that we've been reviewing, including your payment and all the closing costs, and gives you our best estimate of the cash you're going to need to buy your home. So, the first section to pay attention to at the top of the loan estimate is the rate lock section right here. It's going to say yes or no. If the rate lock says yes, that means the interest rate that we have in this estimate will not move. It is fixed, it is locked in. If no is marked, it means that the rate is floating or moving. It moves every day, sometimes every hour. And so between now and us locking in the rate can change. Just be aware of that. And we need to lock in usually within about 4 or 5 days of closing. So just keep that in mind. The top section here shows you your loan amount, your interest rate, and just the principal and interest payment. So this top payment does not include taxes and insurance. If we scroll down, we'll see the total payment, including your escrows. Again, escrows means taxes and insurance that we're withholding. If you put less than 20% down, you'll also see mortgage insurance here, where this number is, and that is included in the total payment shown below. So taxes, insurance, mortgage insurance, principal, and interest is what's in that total payment. What is not in that payment is HOA. So if you have an HOA or a condo fee on the home that you're buying, that'll be in addition to the payment that you see here. At the bottom of the first page, it'll show you the total estimated cash to close and the total closing costs that we're going to be breaking down below. So here's when we get into the details of the closing costs and the money you're bringing to closing. The top left section, section A, these are all of your lender fees. So no matter what size loan you do, it could be $1, it could be $1,000,000, the commitment fee stays the same. What changes is the points section. So this number right here, and it says points. Points are what you pay to buy down your interest rate. If you've purchased any points or put money towards buying down your interest rate, that is the section you'll see it in. The next section, B, is for your verifications. Verifications of employment, your credit report, your flood certification. Not all employers charge us for a verification of employment. If your employer does not charge us for the verification, this fee will drop off. Or if you're self-employed and you see a fee here, there's no cost for verification of employment, so that fee will go away. We disclose it in the very beginning just in case something pops up where we need to charge you, but you will not be charged more than what your employer charges. Section C is for the attorney. Attorneys charge for their time, of course, usually around $1,000, but they also charge title insurance. So lender's title, you'll actually see title insurance in two sections. Lender's title in section C, owner's title insurance in section H. I'll cover that in a second. But you'll see the lender's title insurance, and then the fees associated with recording your deed at the courthouse, the courier and the service fee. So that's what the attorney charges to do your purchase. Section E is also from the attorney. The county is going to charge about $150 to record your deed at the courthouse. And now, section F and G. Bear with me. This is where we get the most questions. Section F, G, and H is where the questions pop up. So if I've lost you, if you fell asleep, I need you to come back to me right now, okay? So taxes and insurance. We pay a whole year of homeowners insurance up front. So you have a fully paid up policy. That way, if lightning strikes your house a month after closing, you have an insurance policy that'll pay it. That's why we pay a whole year up front. Also, we pay interest for every day you own the home in the month that you close. So let's just say you're buying a house closing in May. You're going to skip a May payment. You're going to skip a June payment. Your first payment is not until July 1st. July pays June's interest, but we skipped a June payment. So June hasn't paid May's interest. So we have to cover May's interest at closing. That's why you see that there. Section G, this section, I consider this for next year's bills. We just paid this year's bills in section F, but next year's bills we have to start saving for in the piggy bank we call escrow. We need to do at least 2 months of homeowners insurance because you skipped your May and June payment. If you had only paid those 2 months, or if you had only paid the months from June on, you'd only have 10 months saved in your piggy bank when insurance is due. Insurance wants 12 months. You've only made 10 payments. So we have to cover 2 months at closing. Same with taxes. The difference is tax bills are typically due around September, October. So not only do we have to cover the 2 months that you have missed in mortgage payments, we also have to cover the last 3 months of next year. That's why there's usually 5 months escrowed under property taxes. I know that's confusing. Of course, call us if you have any questions on that. The last section is H. These are the voluntary fees. Not everybody gets a survey done. So there is a chance that this number goes away when you get to closing because you didn't get a survey. Most people do, though. And surveys can run anywhere. I mean, I have seen them as low as $300 and as high as $1,000. So depending on what kind of survey you do, this number is going to change. But that's our best guess for right now, if you choose to have one. And then also that optional owner's title insurance. This covers your attorney fees if anybody ever tries to sue you or claim ownership of your home. That's what title insurance covers, is the attorneys to help fight for your title to keep you on title of your home. Very rare occasion that happens, but it does happen. It's very costly when it does. So it's worth paying that optional owner's title insurance at closing because it is a permanent insurance. One-time fee will be there with you for the life of owning the home. The very last section is the summary. It has your total closing costs, your total down payment. This is your earnest money and due diligence, those deposits that you've already paid towards the home. Also, if the seller gives you any money towards closing costs, you'll see them as a credit here. All of this adds up to your estimated cash to close, what you're bringing to the attorney on the day of closing. Please call us if you have any questions, and hopefully this was a good summary of what you're seeing on your loan estimate.